Okay, you'll remember back in June, SpaceX went public. It was the biggest IPO in history. And everyone was pretty much asking the same questions. Is the stock going to pop? Is Elon going to win? Is Wall Street going to love it, hate it, whatever? And for a minute, you'll remember it did pop. It popped pretty hard. By the way, I'm Amber Haley. I am your tech and real estate expert here in Austin, Texas. I'm also your future realtor whenever you're ready. And today I've got the update that nobody's really covering the Austin angle on yet because I think everybody moved on to the next headline or something. But let me actually walk you through the whole timeline first, because I think the shape of this whole SpaceX IPO story matters a whole lot more than really any single number in it. Now, think back to June. SpaceX priced at $135 a share. That happened on June 12th. It closed that first day at $161. That's a 19% pop. And that alone made it the biggest IPO in history. $75 billion raised. Okay. That's more than Saudi Aramco. That's more than anything before it. And it didn't stop there either. The stock kept climbing. In fact, it hit $225 within that first week. And everyone, myself included, I will own it, started doing the math on that. We've got thousands of new millionaires. Okay, I'm thinking Austin real estate. I'm thinking the whole wealth effect story. I was going to make a whole video about it. Okay, luxury homes, lakefront, hill country, all of it. Except that's not where we're at anymore, not even close. So as of the first week of August, the stock closed at $133.11. And that's just below the $135 IPO price. And it's roughly 41% off that $225 peak from June. So the stock that was up 19% on day one and up 67% within a week is now sitting slightly underwater from where it started. Now, that is a wild swing in less than 2 months. And I don't think most people outside the finance world probably even really clocked that it happened. I don't know. Let me know in the comments. But now part of why it dropped, and I think this is actually worth explaining, is earnings. So SpaceX reported its first quarterly results as a public company on August 4th. And while the headline numbers were actually pretty strong, the real revenue growth, the real cloud and AI contract wins, the market reaction was still pretty rough, which happens sometimes with a stock this hype. When it's this hyped, okay, the bar for good news gets set impossibly high. All right, then a couple days later on August 6th, the first major lockup release happened. And if you don't know what a lockup is, quick explanation. When a company like this goes public, the employees and the early investors who held the stock before the IPO are contractually blocked from selling it right away, usually for a few months, so the market doesn't get flooded with shares on day one. SpaceX did something a little unusual, though. So instead of a one single lockup date where everything unlocks at once, they decided to stagger it. So on August 6th, that was the first unlocking. So up to $911.5 million shares became eligible to trade. That's about 20% of the restricted shares. Not all of them. There's more scheduled to release. There's another larger after Q3 earnings. Eligible to trade is not the same as actually sold, by the way. And that is an important distinction, I think, because some people probably held, some probably sold. We don't really have full visibility into who did what at SpaceX. So here's the part that I find genuinely so interesting, though. The stock didn't crash on the unlock date the way a lot of people expected, okay? It actually closed up over 6% that day. Now, there's a real argument that a lot of the selling pressure was already priced in before the unlock even happened, people positioning ahead of it. Wall Street sounds like they're pretty split on where this goes from here too, and I think that's what is worth knowing about if you're trying to figure out what any of this means locally here. So Morgan Stanley is bullish, right? They think the fundamentals are basically unchanged and current prices are actually an attractive entry point. Now, on the other side, CFRA initiated coverage with a sell rating and a price target of $115, well below even today's price. And HSBC came in with a hold and a target below the IPO price too. So you've got serious analysts looking at the exact same company and landing in genuinely very different places. And that tells you this is not really a settled story yet. Okay, so here's why any of this actually matters for Austin, I think. Now, SpaceX has a real campus in Bastrop. It's 30 miles from here. There's a real employee base in this area, and the whole June narrative was built on a simple assumption. People get to actually sell their shares eventually, right? That's what we all assumed. And some meaningful chunk of that money shows up in our local real estate, in luxury purchases, in the whole local wealth effect story. Again, the same thing that happened here with Dell back in the 80s. Remember that? The Dellionaires, I think is what they called them. Now, that assumption is not dead, But it's a lot less simple now because the first real chunk of stock became sellable right around a 41% dip instead of the near highs that everyone was picturing back in June. Now, if you got your equity early and your cost basis is low, you might still be sitting on a genuinely great little fortune there, a great gain, even on today's price. That is true. That has not gone away. But the easy version of the story, everybody instantly buying a $5 million home because they're suddenly very cash liquid, that version is gone, at least for now. And what actually happens, I think, in Austin here depends on individual decisions, right? So somebody's tax situation, how concentrated maybe their net worth is in one stock, and whether they need cash right now or they can afford to just wait this out and see where things land. Now, worth knowing too, there was some real reporting back in June that some SpaceX employees were considering margin loans, basically meaning they are borrowing money using their locked up shares as collateral to buy real estate before any of this even played out, betting the price would hold. Now, I can't really tell you who actually did that or where any specific person stands today. That's between them and their lender and God. But that's a material different bet after a 41% drop than it looked like when the stock was sitting at nearly $225. So here's my honest take, and it's genuinely a different take than you may have heard on this topic or maybe I've talked about before. But I don't think that the SpaceX effect on Austin is canceled. I think the easy, confident version is probably gone. And what's left is this messier and more individual version than like a clean headline. So if you own something in the luxury tier and you were counting on a wave of SpaceX money showing up on some predictable timeline, or you're just looking at what prices are going to do in the luxury market in Austin, I wouldn't underwrite any like decisions around a calendar anymore. I'd watch actual transactions instead of a story that made sense in June, but doesn't really fully hold up in August. Surprise, surprise. And if you are a SpaceX employee making a real estate decision based on your equity right now, genuinely talk to an actual tax and financial professional before you make a move based on a headline. Mine included, okay? This stuff is more personal and more complicated than any like short YouTube video can fully capture. Also, if you want to talk through where you actually stand on the real estate side of any of this, I got a form for you below. I'll walk you all through it. Again, I'm Amber Haley. See you next week.